Hey there, this is Anna with the Accountants for Creatives, here to explain a little bit about tax brackets. These are 2022 tax brackets. Tax brackets vary by filing status, single, married filing joint, head of household, and can range from 10 to 37%. For this demonstration, we are using single tax brackets 10 to 24%. This is Meg. She is single, made $100,000 in 2022. Most would think that this would put her in the 24% tax bracket, but this is wrong. Now, instead of us thinking of these as brackets, let's think of them as different size piggy banks. Tax brackets are marginal, meaning that your income is taxed at different rates. Your income is actually divided between the piggy banks. But before you fill up those piggy banks, you get a special piggy bank. The money that you put in here is not taxed. The IRS allows single tax filers to automatically put $12,950 into this non-taxable piggy bank, and even more for married filers. If you end up spending a lot of money on things like medical expenses, home mortgage interest, and charitable donations, you get to put even more in this special piggy bank. These are your tax deductions. Let's get back to Meg, her various size piggy banks, and her $100K. After she was allowed to put some of her money into the special piggy bank, she must now allocate the rest of her money to these other piggy banks, starting by filling up the smallest one first, and so forth. After her deductions, Meg's taxable income is now at $87,050. Only $10,275 can fit into the smallest piggy bank and is taxed at 10%. Only $31,500 can fit into the next piggy bank and is taxed at 12%. And even though the next piggy bank can fit up to $47,300, she only has a little over $45,000 left, which will be taxed at 22%. As you can see, no money is left over to be taxed at 24%. And if Meg gets a raise, that money will go into whichever piggy bank has more room. Let's say she gets a $5,000 raise. The first $2,025 can still fit into the 22% piggy bank, and the rest will go into the next size up, 24%. Only the raise will partially be taxed at 24%. The rate of the largest piggy bank that your money starts filling is your marginal tax rate, or what people usually call their tax bracket. The overall rate of tax you actually pay is called your effective tax rate, which is usually much lower than your marginal tax rate. To recap, Meg's salary plus her raise less her deductions equaled $92,050. Her taxable income was then divided between the various size piggy banks and taxed at different rates. The highest rate her income was taxed at was 24%, but only $2,975 was taxed at that rate. The total tax paid divided by her taxable income gives us her effective tax rate of 17.3%. which is lower than the commonly expected tax rate of 24%. So, next time you get that raise or your business income increases, just remember the facts that we just gave you about marginal tax rates versus your effective tax rate, along with your various size piggy bank.